Hey guys, David Robinson here. Welcome to the Apartment Investing Journey. We've got another great episode, another great guest for you today. I've got Christopher Nelson with me on the show today. Christopher, how are you?
Doing very well. Thanks, David.
So, Christopher is the principal and co founder of Wealthward Capital, a real estate investment firm with a diverse portfolio of over 3,000 multifamily units, mobile home parks, and ATMs. Christopher shows technology employees how to achieve financial independence through education and creating passive income portfolios. And he's currently in the process of editing his to come book, From No Dough to IPO. I love the title. Great job.
Hey, thanks so
Um,
much.
so, Christopher, that's obviously a very, very brief bio. Our podcast is all about the journey, and you do a great job of sharing your story and how you got into the space. So, if you don't mind, let's back up and let's talk about that. Where did this all begin for you?
Well, this all began really with an IPO. It began in an instant when all of a sudden I came into sudden wealth, and that was something that I had been planning and working towards in my career, was getting to the point where I had a large equity event for myself and for my family. But it was truly within the hours of that happening. I went home to my wife and shared with her, okay, hey, here's the great blessing that happened to our family, multiple seven-figure payday on paper. And when she started asking questions like, okay, when do we get the money? When can we go buy our home? She was pregnant at the time. And what should we do with it? That sent me into a lot of anxiety, fear, and frustration. And what I was experiencing is what many people experience when they go through similar events is it's called sudden wealth. And it's a really a psychological effect. And you get overwhelmed with a lot of anxiety and fear and not wanting to lose it. And it was really out of that I realized, okay, I want to get into real estate and I have to get educated.
Wow. And so this is great. I love that this is sort of your niche, situation. There's so many people that are in a situation like yours, especially in the market that I'm in here in Utah. There's a lot
Yeah.
of tech companies that, have been exploding, some big IPOs over the last few years. And so I'd love to hear a little bit more about just some of the practical advice that you have for individuals that are in a scenario like that, where they experience that sudden wealth, and then what? What were the steps that you and your wife took to sort of navigate that space?
Well, I think the first step is that we had to realize that what we were feeling was okay. I think, like many people, it's easy to feel an imposter syndrome or to feel overwhelmed that we can't manage it. When the reality is, we've done a lot of significant things in our life, from work and working in technology companies and getting there. So I think getting past that emotional hurdle and feeling comfortable in it, number one. Number two was also understanding that we didn't have to do anything right away, that we actually had time, we could actually study and do some research, was number two. And then more than anything, it was very, very helpful to talk to people like us going through similar experiences, that we could really understand what they had done, and then we could choose our own path. We felt like that was more important than rushing into the office of a financial advisor, was to really understand what other people were doing and their experiences before we just went and sought out a professional.
And did you find, as you sought out, let's call them mentors or people that had gone before you and had this similar type of experience, did you find that many of them had gone into real estate as a vehicle to sort of preserve and grow their wealth? Or were there many different strategies that people employed?
There were many different strategies. In being at that point, we were living in the Silicon Valley. And so I came across a lot of people who were managing their own portfolio in the market and had then decided to put their investments into venture capital. And for myself, I'd been, actually have a longer story. I'd been pursuing real estate before and really had an intention, as once we got to this equity event, to pursuing real estate. I was really listening for people who were in real estate and what they were choosing to do. And what I found out is that the people who were doing real estate very effectively were living in California and they were investing out of state.
Mm, love it. And
Yeah.
so for you, instead of taking a chunk of the money off the table and going and putting that directly into, the next investment property. You've sort of built a business around investing in larger commercial assets. Talk to us a little bit about how that progressed, and why not just go buy a property that you felt like you could acquire, that was local, that you could get your hands on, that you could see and experience, versus going the path that you have.
Well, that was a journey too, David. And I have to be honest with you, is that we actually started off we started off looking at crowdfunding. And the first thing that I knew is that when I got into real estate, the most important thing for me was to understand the math beneath it, because I knew, and this is what some of my mentors had told me, is that if you understand the math, you understand how the numbers work, and you can double click on some of those key assumptions, you will then be able to find the great investments and understand the good from the great. And so we actually then in crowdfunding started just picking off one or two things. And we started off as LPs doing smaller investments. We then actually, as a family, made the decision to leave the Silicon Valley and move to Austin, Texas, where we are today. And we actually started with single family properties. So we did get our hands in the, doing all of the property management, acquiring the real estate, et cetera. And that's when I realized, okay, I want to try to find something where I can actually get to know the operators, be boots on the ground with the commercial, and so remove sort of the middleman as far as the crowdfunding goes. But I wanted something that was more scale than the individual homes. And at that point, 2017, Central Texas was booming from a multifamily perspective. And so that was where I was able to find, different operators. And quite honestly, I was going down the path happily as a LP. And I thought to myself, I was never going to invest money for other people. What happened is that as I was, still taking regular trips back to the Silicon Valley and sharing with this group of people who I'd been talking about investments with, what I was doing now, many of them raised their hands and said, we want in. And there was a big decision point there, because I wasn't sure if I wanted to be responsible with placing investments for other people. But what I really heard from them is that we need help. We're not clear on actually how to get, real estate income into our portfolios. And so that's when I realized that there was a opportunity to help people in need, and many people don't envision that, technology employees who are, going through these events are people in need. But like many of us, managing our portfolios and trying to find real yield in today's environment, when the bond market is fundamentally broken, is hard. And so that's where we started Wealthward Capital late in 2017 and have been growing it ever since.
Yeah, love it. And incredible timing. Yeah, Central Texas in 2017. Not a bad time to start that type of a business. Good for you. So let's take the conversation forward a little bit. Let's talk about what your business looks like today and what you're focused on.
Well, what we're focused on today is building portfolios. I think that as people get into this business, and what I've observed is that it's really easy, for operators specifically, they're generally going to be in a geographic region, or they're going to be in an asset class, and their focus is going to be on finding the next great investment for their investors. From my perspective, being a private equity business that I am agnostic to operator and asset class, we've really been looking at the multifamily asset class here in Central Texas, where we've been invested, for the last few years. Is, cap rates are shrinking, and so is cash flow. And so we've been exploring in the last couple of years some new asset classes, right? You heard about the ATMs, and then now mobile home parks, because we're actually seeing in mobile home parks some of the inefficiencies that we saw in multifamily back in, 2014, 2015, and also some of the same opportunity to partner with operators that can generate great cash flow and can also do some cash out refis that are things that we aren't seeing. So we're truly, this year, we have been investing in multifamily, continuing, and then also now expanding into mobile home parks, so that we look across our portfolio and we're still able to get those returns and that cash flow that we need.
And I want to spend a little bit of time on mobile home parks, but you mentioned ATMs. And so I'm not sure if you've gone as far as actually investing in an ATM fund or creating a fund for that, or how those are structured, but maybe just shed some very basic light on why you would even explore ATM.
Oh yes, so we did. So we we created a ATM fund this last year, and we invested in a larger fund that's
Mm,
exposed to. It's a diversified ATM fund across the Northeast, and it's truly cash flow. I mean, it was
mm.
a 24% cash on cash return with high depreciation. I mean, you're buying a piece of
Like a hundred
technology.
percent,
Right. Yeah, it is. It's
close to
100%
it.
depreciation. Yeah.
Okay.
And
Okay.
so it was a different profile. And again, when you think about you bring ATM and that high cash flow, we were looking for something to supercharge our cash flow because our portfolios today, what we're trying to do at Wealthward Capital is we're building our portfolio in front of our investors. So
Mm.
we as a family have been deploying, we're now close to been deploying $1 million in front of our investors, showing them, here's what we've done with multifamily. Now we're including ATMs. And so our goal is to get our portfolio so that we can be doing an investment from our portfolio as generating an investment every single quarter. And so that was really one of the things that led to the ATM investment and then also led us to mobile home parks.
Well, let's shift gears and let's talk about mobile home parks then. You mentioned that you saw some of the same similarities, the market had experienced back in, 2000, 2014, 15, 16, leading up to when you got in 2017.
Yeah.
That you're seeing that same type of opportunity in the mobile home park space. Maybe just talk to us a little bit more about why the pivot into that space and how you've gone about sort of creating those opportunities for members of your investor network.
So, mobile home parks are still, very, very, disorganized, if you will, right? A lot of mom and pop operators. And I think that, what we've seen from a multifamily perspective happen in the last, 7 to 10 years has been there's been a lot of people coming in and running these sort of, boutique or mid-level market operations inside of multifamily. That does not exist inside of the mobile home parks. The majority of them are owned by people who built them 20, 30, 40 years ago, have been operating them for cash flow. Many of them are paid off. They're operating them for cash flow. And the majority of the owners are baby boomers. They're tired. They want to get out. And they're running these parks very inefficiently. Some of them we're finding are at 60% occupancy, 70% occupancy. Why? Because they're meeting the number that they need to for their, income. And then other than that, they're tired and they want to get out. And so there's a real opportunity to, what happened is you had educators were coming in and showing people, okay, how do you actually operate multifamily as a business, create smaller portfolios of holding, run them as a portfolio, and then, sell them to institutional investors. The same opportunity is there in mobile home parks today. And that's what we're doing. We found the right operator to work with and we're executing. We went to, acquire 300 pads in smaller parks in a year. And we've done that in 6 months. We've been able to close that out in 6 months. And we're going to move into next year and we're planning to acquire 1,000 pads.
Oh, that's great. Good for you guys. And so just for context, your business model at Wealthward Capital, do you function as a fund and then invest in multiple different opportunities, or are you doing one-off syndications?
We do a combination of both. Okay. So it really is, whatever we feel that we have multiple tools at our disposal. Our goal is to provide, institutional quality returns for our investors. And so, it depends on how we want to partner with those specific operators. We do our syndicating all of our multifamily where we're doing funds for the ATMs and we're doing funds for the mobile home park. And so moving forward, it's, really what is the tool that can, again, provide the best returns?
Yeah, great. Well, I appreciate you shedding a little bit of light on the ATMs as well as the mobile home parks. The vast majority of your experiences in the multifamily space up to this point. So let's talk about a particular deal that you've done. And I love this.
Yeah.
I ask most of my guests that come on if there's a particular deal that we could discuss that would be helpful to our listeners. And for the most part, everybody chooses the home run, right? And I love that you were willing to have a chat with us about a base hit.
Yeah.
Let's start off by talking about why you think it's important to talk about the base hit.
Well, it's again, my journey is I got in here as an investor, and I think it's so important to message to our investors what is real life like. If we communicate to our investors that everything is going to be a home run, what's going to happen when we get the first base hit? There's going to be disappointment. However, if we let people know we're building a portfolio, we're on a journey together, there's going to be base hits, there's going to be doubles, triples, and home runs, but all of them combined should provide this nice, diverse platform that is going to be your family's financial fortress. That's really how I want to educate people. And again, you'll find that, I am very transparent. Probably, people would argue I'm too transparent, but I am building this portfolio in front of them. I am putting my own family's money to work. And so this is where, I come at this from a different perspective. And so I think the base hits, like in baseball, base hits are going to help you eventually win the ball game. Base hits are essential to what we do. And sometimes we get that, let's celebrate it.
Yeah, love it. Well, let's dive into this 244 unit deal in Dallas Metro. If you can, just describe the asset for us in general.
So it was a 1979 build. It was in, on the east side of Dallas, and we purchased it for 17.3 million, and we planned for 1.6 million of capex, and raised 6.8 million. And so this was an asset that we bought in August of 2017. And, right from the get-go, good things were happening. We were getting the NOI growth. We were executing our business plan, and things were going very well. And it was phenomenal. It was it was going to be a 9% annualized cash flow at the very end. We were giving 8% cash on cash return distributions. We're paying out monthly. Everything was going well. But like many multifamily operators, all of a sudden 2020 happened. And in 2020, what we realized is that it's the micro markets that made the difference. The micro markets made the difference between, phenomenal success and headwinds. And what we had in this particular micro market was it was primarily service industry. So a lot of food service industry, a lot of seasonal employment. And while it was very diverse, the majority of those were taking an impact from COVID. And so what we found is why occupancy rate was staying in the 92, 93%, our collections rate, really struggled. And while it was bolstered by some of the, concessions and different payment plans that the government had put in place, we really saw headwinds in this. So as we came into 2021, there was an opportunity and an offer that came in front of us. And as we were looking over our portfolio, what we did going into this year is we saw some of the key properties. And it was obvious to us as we started tracking occupancy versus collection rate, and then also doing a deeper dive into, what were some of those collections as a result of in those micro markets. We then ended up liquidating, 2 or 3 properties this year, this being one of them. And at the end of the day, we purchased for 17.3, we sold it for 24.8, so we did have, 43% growth over 45 months. And, that added into a 15% annualized cash on cash return versus our target was 22, right? We got a 1.54 equity multiple where the pro forma is 2.1. And we ended up with a 14.3 IRR versus the 18.1 target. And at the end of the day, I think all of us, when we had seen the air pockets that particular property had, were thrilled to be taking money off the table It was a win for everyone involved. It allowed us to then go redeploy this capital this year for some other properties that we're very bullish on. And and chalk it up as a win. And I think, and I remember hearing the I can't remember, the Jillian, I think, is the principal there at Realty Mogul. And I remember she spoke at a conference once, and her leadoff was, "The pro forma always lies." And that's so important to understand, that the pro forma is guidance, and that's where we think we can hit. But we also need to understand that taking something like this off the table, where we do have a win, where we won, pruning the portfolio, and now going and reinvesting that somewhere where we know has truly weathered the storm of 2020 and is going to thrive moving forward, whatever, new variants we're going to get, is very, very important.
Well, and again, thank you for taking some time to sort of break down that deal for us. And you made some great points. And I want to just add to that. That's one of the wonderful things about syndications and these deals becoming more available to investors. And that is that you can diversify, right? You can place really minimal amounts of equity into many different deals across many different markets, across many different asset types and asset classes. And you can really build a moat around this fortress, as you call it, right? That's going to contain your family's financial future. And so I love that you really pointed to this portfolio concept of like, look, you're going to have some home runs. It's going to happen, especially in a market that we've been in. But there's also going to be some base hits. And really what we're trying to do is have a very reasonable and favorable average return on investment. And if you can do that across your portfolio, then you're going to win in the long term. And so I love that perspective. I think it's prudent, and I think it's wise. Well, I want to start winding down here a little bit, but I've got a few final questions for you. The first is, what's the biggest challenge that you're facing right now in your business?
I think there's two challenges right now that are being faced in my business, and I think that's yield and deal flow. Right now, everyone and their mother and their brother is out there scouring the real estate surface for what is going to be something that is producing great cash on cash return. And then how can I go and replicate that? So I think that is a big challenge. And this is where, we've chosen to pivot into the mobile home space, because there is a lot more opportunity for deal flow and yield there versus multifamily. I mean, it's going to be fewer and farther between, just because we're seeing, that cap rate compression.
And as you have gone down that path of, expanding your horizons a little bit into the mobile home parks, did you deploy a similar strategy with the mobile home parks as you did getting into the multifamily space as far as finding deals? Were you able to sort of replicate what you did from a multifamily perspective and take that and rinse and repeat in the mobile home park space as far as finding deals and finding operators?
Very much so. And for me, it's really finding operating partners, right? I really prefer to be on the capital side. So I want to find people that are operating at a very high level, that have a great reputation, that have the healthy scar tissue, that then are looking to grow and looking to expand. And then it's about really spending time with them and understanding if there's a fit, philosophically from a principal perspective, and then an execution perspective. And so everything that I learned from multifamily really set me up for success when I went into the mobile home park business, 100%.
Yeah, I love that. The next question I got for you is, what are you absolutely crushing in your business right now that we could all learn from?
What am I crushing from in my business right now?
What's going just really, really well?
Well, no. And so I would say that what's really happening right now that I think I'm doing really well is building out a team. I think that this is something that I've taken from my technology jobs, as I realized that, as I evolved as an executive, that it wasn't so much about building great things with technology. It's about bringing the right people together. So, throughout 2019 and 2020, I've been putting together this phenomenal rock star team that I am so thrilled going into 2020, because when I talk to each and every individual and we come together as a team, like I can just, like, the energy coming off this team is just amazing. And so I would say, 2022 is going to be an explosive year for our business. So stay tuned and watch us.
And speaking of building out your team, what if you were advising someone on the first steps to building out a team? What would you suggest those steps might be?
I think the first step is understand what your strengths are, and in knowing where you need to be participating, where you want to spend your calories, your time, your effort. And then you need to find out, what you don't have, so that you find somebody to complement that. And then as time goes on, it may be just things that while you enjoy doing them, you need to laser focus on a certain area. So if you are the numbers person and you love grinding through the spreadsheets, but you don't like talking to investors, then how do you find somebody who loves talking to investors? Or if you are the operations person and you love going and finding the right opportunities and executing them, and you need a capital partner, then go find that. But I would say understand where you want to play and where you can really thrive, and then try and go around and fill those gaps.
Love it. Great advice. Well, this has been a great conversation, Christopher. I appreciate you, sharing a little bit about your journey. When does the book come out, by the way? I know you're in the process of editing it. Sometimes go ahead.
So the target is the end of April is we're looking to launch the book. And this is something that has been a passion project of mine for the last couple of years, been writing it behind the scenes, but it's truly almost an investor's lens to people who want to go work for equity, because I think many people don't understand the playing field, and they go play for the high risk, high reward of these super early stage startups and say, why doesn't this work for me? What I'm here to tell you is, I've when I started working for startup companies, which was 10 years ago, 3 out of the 5 I've worked for have all gone through successful IPOs. And that's not by chance. I'm not lucky. There's a due diligence process. There's a focus. There's a lens. And I am going to be kicking off a podcast this year called Tech Careers and Money Talk, where I'm going to bring on people who have done this before, serial IPOs, serial entrepreneurs, and also people who've made tremendous amounts of money at public tech companies as well, to share with all my technoids different ways that they can use their W-2 job to build wealth that then they can go invest.
Awesome. Well, Christopher, I appreciate you spending some time with us and sharing some insight into your own personal journey, as well as, how you've structured your business and some of the things that you're focusing on, from the multifamily space to the ATMs and to mobile home parks, and what you see on the horizon for you. What's the best way for our listeners to connect with you and learn more about what you have going on?
Well, they can reach me at wealthword.com. That's one word. It's wealth and word, like towards, like moving towards wealth. And I'll include that in the show notes, but wealthword.com.
Awesome. Well, Christopher, again, thank you for your time. I appreciate you sharing your journey with us, and I look forward to connecting with you again soon.
All right. Thanks so much. Great talking with you too, David.